Welcome back, Internet Capital, episode 5. We got a jam-packed week. The Grand Tonto, how are you doing?
I'm doing great. This is, I think, my fourth or fifth location. I'm in the mecca of high school and college basketball, Bloomington, Indiana, this week. Happy to be here and excited for the show.
Yeah, you're moving around a lot. I like that, though. Different backgrounds, different places. I like it. But just to give you guys an overview of what we got for the show this week, one, ZKsync Airdrop, big news. Paradigm raises an $850 million early stage crypto VC fund. Curve's founder is liquidated on $100 million of CRV loans. Terraform Labs and Kwon are fined $4.5 billion by the United States SEC. So we got a lot going on. That's just the beginning of it. Really excited to dive into this one. Anything you want to say before we get started?
No, let's go.
Cool. So we're going to start with markets. And the big news this week was we really traded down hard. The whole market's down. Altcoins are down terribly, which I'm going to show a chart that's pretty surprising. But the news is the Federal Reserve is actually decreasing their probability of 2 interest rate cuts this year. So they're forecasting only one for 2024. And this is poised to set rates at their highest level in 20 years at a Fed funds target rate of 5 to 5.25%. So that's the news. Any comment before we dive into some charts?
Yeah, I think the sell-off was exacerbated not only by that, but I think there was some expectation that the Fed was going to cut rates because the Canadian central bank and the European central bank both cut rates by about a 1/4% earlier in the week or even late last week. So that I think there was some thought that, well, the Fed would follow suit, and they didn't, and there was a sell-off.
Yeah, and inflation data came in cooler than it was expected as well. So I think that played a part. But regardless, we said it before, I'm of the opinion this is positive for crypto markets specifically, extends the cycle, gives us more time for these other catalysts. So it is what it is. So let's dive into the Bitcoin chart. And by the way, I do not have any new takes from Steven or anyone else this week. Those will be periodic depending on when he puts them out, when other traders put them out. So we're just going to give our quick takes on the charts here. So I'm going to pull this up. Can you see that?
Yep, looks good.
Yeah, here we go. So looks like we're down about 5% on the week, and we're recording this on Saturday. So we opened at about 69,649, sitting at about 66,189, and really still in this holding pattern here, which I think is generally okay still, but it's been a few months. We haven't really moved in crypto terms. So still feeling pretty good about it. Any thoughts on the chart?
Yeah, I mean, I agree with what you said. I do want to chime in that a BlackRock executive this week pointed out that they, as a company, believe it's still the beginning and that the people that are going to invest in the Bitcoin ETF and the Ethereum ETF have, quote, just started. So that's going to drive a lot more, I think, higher prices, going to drive a lot more adoption. So I think we just continue to wait this out and let the normal capital markets play out and move to the assets they want to move to. And I think crypto is going to be one of those in a big way.
100%. I agree with that take. And I would also say I heard a stat today that the gold ETF had 8 straight years of average inflows. So day to day, there could be outflows, obviously. But over those 8 years, month to month, they had positive inflows that entire time. So if we see a similar pattern with Bitcoin, which is the closest comp and kind of the millennials gold, let's say,
Yep.
that could be a pattern that we'll see. And I think we have plenty of time. Everyone looking at the 1 minute chart day to day, that's not the way to do it. Zoom out, still feeling pretty good about the ETFs. We got BlackRock on our side. So
That's what I do. You mean I shouldn't look at the 1 minute charts?
no, no, that's anxiety provoking, sir.
Okay. I mean, that's, well, a lot of drug companies are making a lot of money then.
Yeah, true. The crypto market
Yes.
is ripe for anti-anxiety drugs, ADHD drugs. I think these traders sitting on their computers all day. Touch grass, everyone. Get outside. It's good for you.
Yes.
Okay, so
But did
here's
I tell you
ETH.
that's what I'm going to do later?
Touch
I'm going to do
grass.
yard work later. I'm going to touch grass later. Literally
See,
touch grass.
nature's medicine. Nature's medicine.
Exactly. Please continue.
Yes. Okay, so we got the ETH chart now, and We got a little bit like a double top here. We ran up after the ETH ETF 19B-4 form approvals, and we had that ginormous candle, which we talked about. We've really traded down the last 3 weeks. So we opened this week at 3,700, currently sitting at about 3,560. And you can see this wick down here. We traded all the way down to the 3,300s, which in my opinion, that's going to be a generational buying opportunity. I think we see ETH upwards of $8,000 this cycle. So I think that's a great entry there. And this is still a good place to add, in my opinion. And that's probably what I'll be doing. But the news here that I do want to point out is that we recently got information that the SEC is receiving updated S1 forms from all the issuers, which they need to approve each individual ETF. And those are projected to be approved by July 2nd, according to Eric Balchunas at Bloomberg.
Yep.
So we could see the ETH ETFs trading in early July. Any thoughts on that?
No, I think I want to just point out, I think I called June 30th, so I'm pretty happy about that date of July 2nd. Could be sooner, you never know. The thing I want to talk about ETH, though, and I mentioned this to you in our pre-production meeting, is that there's been a lot of just chatter in general about TradFi using blockchains just this week. And I think there was a comment again by a BlackRock guy that said, the whole idea of private blockchains, meaning proprietary blockchains to store data, that's out the window. It's public blockchains. And generally, when they say it, that means Ethereum. So I think all of that is very, very positive. Yeah, it's a little harder to understand than digital gold, but when they're talking about tokenizing a world of $100 trillion of assets, that's very, very powerful.
100%. And actually, we forgot to shout it out, but we have an interview coming out with Justin Bibas, the founder of Ironclad Protocol on Mode, the second largest lending protocol on the network. Also the CEO of Conclave, a developer collective. Awesome guy. Shout out Justin. But what comes to mind whenever you say that is that he said, from his view of talking with these people, they are very interested in tokenization. And that is a very clear vision for BlackRock and others for the way the financial system is moving. So they're committed. And as BlackRock already exemplified with a few different projects on Ethereum, they're building on Ethereum itself. So this isn't going away. And that's just bullish generally. I completely agree with that take.
Yeah, huge tailwind. And again, just plug the Bibas interview. It's a little bit different kind of interview. You told me that maybe your eyes glazed over a little when we were talking geek stuff. And I got to tell everyone that the word polymath and Magnus Opus, I believe was the word came up, and LaTeX. Those are things you don't hear often in crypto interviews. I thoroughly enjoyed it. He's a great guy, incredibly knowledgeable, and shared some alpha on where Ironclad and Mode and the superchain ecosystem is going in the medium and long term. So it's really great stuff. That'll be out at least in pieces sometime early next week.
Yeah, tune in. I'll be posting some short clips from that, kind of tease you, and then you can tune in when the full thing is live. Great guy, great insights, some alpha in there. Really enjoyed that.
Yep.
But to continue here, I'm pulling up the Arbitrum ETH chart. So this is the price of Arbitrum per one Ethereum. So you can kind of see how different coins are trading against each other. And this is it's a terrible chart, right? You look at it, this is awful. They have, I don't even know how many weeks this is of essentially down only, and we're at all-time lows. And I just wanted to bring this up because it really exemplifies where the altcoin market is. You can look at Total 3, and that's one way to look at it, although some other of the top coins, such as Solana, Ton, some others, have been doing fine. So I think looking at L2 tokens versus ETH is a really good way to get a sense of how the market's trading, and this is how it is. It's down only. The focus is completely on ETH and Bitcoin, which, as we mentioned, aren't even great at the moment. But I think this just could be viewed in retrospect as a turning point for crypto markets. For the longest time, it was very speculative, very retail driven, and these random coins would pump. And it seems like we're returning to the core technological pieces and things that have some form of fundamentals, which could be a recurring theme throughout the cycle. I also would not be surprised to see retail come back and to see these altcoin charts explode against ETH and Bitcoin. But for the time being, there's no signs of that. And again, this just further reinforces the idea that this is a institutionally driven cycle. So, any thoughts on that?
Well, generally, yeah, I agree with all that. I think the thing that's shocking to me is of the L2s that I know something about are always seem like a useful and in use L2. I'm not really sure about its revenue model, but compared to some other L2s that are valued much higher or basically are full of a bunch of stupid stuff, ARB always seemed like a credible L2 that was used to accomplish something. And to see it get pushed, like just punished, is sort of shocking to me. Now, I'm sure some of them deserve this. I would think ARB in particular doesn't, but that's just how crypto works, I guess.
Yeah, I think an important thing to point out here too is that you might not understand when you're first getting into crypto is that coin does not equal project. The coin might just be thrown out there, but it really does not benefit from the growth of the project in a meaningful way. So you need to drive revenue back to the coin and distribute it to the holders through staking, through other mechanisms for the value of the project to be transferred to the token. And I think a lot of coins do not have that. And that's a point of research for a lot of projects. How do we build this token model such that we drive value to it so something like this doesn't happen? And we can get more into that later, bit of an advanced topic, but just wanted to point that out as well.
Yeah, absolutely. I would love to understand more about that stuff. Do you know, Ben, does ARB have that model? I don't know.
I'm not sure. I don't believe they have staking. I think it's just a governance token. I received the
Gotcha.
airdrop a couple of years ago at this point, but I sold it all, so I didn't participate in governance, none of that. So I'm a bit disconnected. But as far as I understand, they don't have are being used to pay for fees on the network, to stake, to get a portion of sequencer revenues from the L2. Nothing like that, as far as I'm aware.
Okay. All right. Well, let's continue.
Okay. So I'm going to stop sharing here. We can continue to the next thing. And topic one, which is the big thing here today, is the ZKsync airdrop. So ZKsync
Finally.
announced their long-awaited token ZK. Eligible users can claim the token starting on Monday, so that's 2 days from now. But before getting into specifics, I just wanted to bring up how much free money users are getting because that's the most interesting to a lot of people. So ZK on pre-market trading venues such as Avo and Whales Market is currently trading at 36 cents. And the largest token allocation for ZK airdrop recipients was 100,000 tokens. So this implies a $36,000 airdrop for the largest recipients. And not to mention that the token was actually trading at much higher valuations before this and could very well trade higher than that. So first, that's crazy. ZK recipients are getting $36,000 in free money. And I think just pointing that out is crazy to people because they don't understand that's possible in crypto when this happens a lot. You can get these opportunities. So just anything to chime in there before I get into the specifics.
Yeah, so you're going to cover this, but I think it's some context is worthwhile in that, you had to participate in a meaningful capital way for a meaningful amount of time. And I'm not going to steal your thunder, but that seemed to be one of their overriding criteria, even overriding Sybil's and other stuff, that they wanted capital and they want it there for a period of time. And generally I like that. Now, there's some stuff I'll get into later I don't like about what they're doing. But generally, what they did on that particular front, I really, really like and hope others take a similar approach going forward.
Yeah, 100%. I think there is definitely a lot of entitlement in the space, which we'll talk about more. And people think that just because they make a certain number of transactions or do all these things to hit criteria to be able to receive the airdrop means that they should receive it when really their actions are not providing any value. So they have a little amount of money, so they're not providing any value in capital. So the capital will provide liquidity for borrowing and lending and exchanging tokens and other economic activity. So if you have money and you're staking a lot on those protocols on that network, you deserve something because you're putting something on the line. But on the contrary, if you're just doing all these small transactions and you don't have the capital, then that's not an avenue for you to be able to make money this way. You should contribute in other ways, and there's plenty of ways to do that. So I think the feeling of entitlement that a lot of people have is just completely unwarranted. It's a problem, and we can get more into it. But kind of the underlying thing there is that the token was trading at 70 cents and it fell down to this valuation of 36 cents because people were angry that they didn't get enough free money, as we're alluding to. And there was a whole controversy here. So a majority of the complaints on Twitter appear to have come from bots. So ZKsync announces their token, tweets about it. They get thousands of replies, and a lot of them appear to be bots. So it was hard to discriminate who was an actual user who was upset between these bots who were just trying to get the team to change their mind and give them more tokens. So we can get more into that. Any thoughts initially on the whole controversy?
Yeah, I think I'll say it more directly than you. You were very kind. All these e-beggars need to just go away. I want to see a
Yeah,
protocol that says, look,
yeah,
and this is going to happen actually next week or the next week. I want to see a protocol that says, look, I want high valued users. Layer Zero's CEO said they want durable users. That's code name for we don't want people that want our dump our token and leave. Um, and if you're not going to put a substantial amount of money in, and I get, we're very fortunate. We live in America, and it's not the same socioeconomic deal all the way around the world. But part of this whole deal is risk reward. And if you're not willing to risk what is a meaningful amount of capital to protocols that need hundreds of millions of liquidity, then you're not going to receive anything and you need to get over it. Move on to somewhere else. Go farm meme coins, whatever they're called. Do something, but stop griping about this because you didn't risk what other people risked.
yeah. 100% agree there. I think that people just like to complain. Again, they're entitled. And the thing that annoys me the most is that there's plenty of ways to benefit from all of this. You can contribute to the protocol in other ways. You can create content. You can try to learn a skill to join a team and receive some allocation. And it's just people
That
complaining
takes
that
Ben, that takes effort. That takes effort. People don't want to put effort in. They want
it's
free money.
yeah, yeah, it's true. So regardless, I think we've gone off enough there, and we can kind of get into the timeline and then other more valid concerns. That's just our 2 cents there. I think we're
Yeah.
aligned, and a lot of it's getting ridiculous. Projects are going to stop doing airdrops like this because of these people, and they're going to ruin it for everyone. So
Yeah.
okay, so the token was announced on, it was alluded to on Monday and then officially announced on Tuesday. So then Tuesday night, following all these bots and all these people complaining, ZKsync, the ZK Nation, which is their alternative account for this is a bit confusing, but once you release a token, you have a decentralized cohort of people that help to govern the protocol and make decisions about how it's going to allocate funds, how it's going to upgrade itself, and things like that. So it's a decentralized autonomous organization, a DAO, consisting of token holders who have voting rights through the token. So this is their account for this, essentially. But they released a statement saying that the team is still working on the expanded deep dive into the MOAD, the mother of all airdrops, is what they called it. Understandably, there are a lot of questions. We will answer them in full transparency and with great details. This requires more time. Please bear with us. And that was their first statement. And you can see here actually, this is definitely a bot right here. Can I see my updated ZK allocation? How to appeal my current ZK allocation with thousands of likes, only 296 views, but 3.2 thousand likes and 3.2 thousand it's a bot. So that's one. And then later, I believe this was Thursday, perhaps, they released a full document addressing all of the different questions that people had. So they basically said that a lot of these were bots, and we understand that. There were some other legitimate concerns, and just to, among those, to read some of the concerns, and you can dive in here because I know you have some thoughts. Some of the legitimate concerns were this. Multiple applications that are deployed on the ZKsync network did not receive any tokens, while other unrelated applications that are not deployed on the network received large allocations. Two, legitimate users did not receive tokens despite meeting the criteria. Multiple wallets with no transactions on the network received tokens, and addresses of known, unknown bot or Sybil lists received token allocations. So these were some of the problems, and if you wanted to dive into that first one, you can, because I know you have some thoughts.
Yeah, so kind of a meta comment here. I like some of the stuff ZKsync did. I don't like some of the stuff they did. But the bottom line is we have no input. They can decide and do whatever they want to do. And this is their decision. And they, for good or bad, they're held accountable to the outcome.
Is that I think people shouldn't overlook that this was probably one of the best airdrops ever. They're going to airdrop billions of dollars on day one to users. So it's 17.5% of the total token supply is going to be airdropped to users on day one, on Monday. And that's going to be billions of dollars. And the tokens have no vesting periods, completely liquid on day one. And just comparing that to other L2 projects and other projects generally, it's better. It's objectively a better allocation and distribution strategy. Two, 66% of the total supply is going to be allocated to the community through grants programs, through emissions and things like that. So from a community's perspective, it was a good airdrop. And that's the last thing I'll say. I don't think people have much room to complain on that front.
So, Ben, I'm reading one of your notes, and there's that 4-year unlock for investors and for the team. And we've talked a lot about, sort of the whole concept of money talks, bullshit walks. I've seen a lot of FUD about the price of the ZK token, but I can't believe for a second that these big time investors who vest over 4 years are going to let this token go to zero. They're not in this business to lose money. They're going to make sure they get their money out. So, people can FUD it, people can do this and do that. But the bottom line is the money guys are holding a lot of the strings here. And for all of us users, that should be a good thing. So maybe I'm more right in the middle on this. I'm certainly going to be happy if I can exchange my tokens. I don't have an interest in governance there. But I think it will be not FUDed as hard as people think. Now, in the next week, 2 weeks, 2 months, we're going to find out.
Yeah, 100%. I think the thing to note, building off your comment, is that ZKsync Matter Labs raised $500 million plus dollars. And notable the investors are all the big crypto investors in the space. They have Dragonfly, Paradigm, I believe. They have market makers such as Wintermute. They even have some more traditional funds on there. And they need the liquidity and they need the token price to stay up, and they're going to keep developing the network and the ecosystem so that they can generate a return on this investment. And everything's with risk, but everyone has an incentive to get that return, and they're not going to stop making moves. They have a lot of partnerships, a lot of resources, so I think the FUD is overstated for sure.
Yep. All right, great. Let's move on.
Cool. So actually, kind of on that note, we mentioned at the beginning, but Paradigm, one of the largest crypto VC funds in the space, raised $850 million for their third crypto fund. And just to give you some context on Paradigm, their general partner, they've a few general partners, but their co-founders, Matt Kwon is one, and then the other one is Fred Ursum, who is a co-founder of Coinbase. So very well respected. They do great research in the space, and they raised this ginormous fund. So $850 million focused on early stage crypto projects. And this comes at a huge time, I think. We've mentioned it before, but there's kind of two vectors. There's the institutional development space, and then there's the retail development space. And this is an injection of capital more so into the retail capital space, if you ask me, because their portfolio and their stated target portfolio companies include crypto games, social apps, prediction markets, gambling / betting sites, things like this. And I think this injection of capital is definitely what we need to get retail back if we're going to get them back. So any thought here?
Well, the first thing that hit me was, this announcement, talking with Justin yesterday, and some of his comments about retail is kind of the first time I've heard in back-to-back days some interest in the retail space from both the developer and from a funder. So I think that's a great thing. Now, having said that, I'm not the demographic that uses these games, but the few I've played sort of need a lot of work to make them fun, or at least palatable, eye-pleasing. Maybe this will go towards that, and certainly if that happens and it catches on, it could be, the next giant thing in crypto, rivaling, Xbox and things like that.
Yeah, 100%. I think the one thing to note here is that I know you play normal games on your phone and things like that, right? People play
Yeah,
games to pass the time. And that's the
yeah,
thing to note. If these crypto companies can figure out how to embed a crypto enabled application on your mobile phone where you can earn or kind of interoperate with your game credits, tokens, levels, status across multiple different games through their general platform, and they make it easy to do on your phone, I think that's a huge unlock because that's not currently a thing that mobile games have. And I think the demographic for games generally is ginormous. If you look at the statistics about how much the gaming economy has grown, not the crypto gaming economy, just generally in the United States over the last 10 years, it's massive. So if you can even tap into 5% of this, 1% of this, it'll be huge. And I think all the money that's getting thrown at the space can figure something out that explodes. But time will tell. So far, you're correct. They're not very good at the moment, and I haven't seen one that is great, but we'll have to keep
yeah,
waiting, keep watching, and see what happens.
yeah, absolutely, absolutely.
Cool. Well, those are my only thoughts from the Paradigm Fund. The next thing we're gonna move on to is that I'm gonna Google this here. We mentioned it at the beginning, but Curve's founder. So Curve is a decentralized exchange on Ethereum. It allows users to swap between tokens, mostly stablecoins. So if you want to swap between USDC stablecoin and USDT stablecoin or whatever, they enable that best because their algorithm, their equations are best for that. But that's kind of besides the point. So the exchange was actually hacked earlier this week, and that caused the price of the exchange's CRV token to tank. And generally that's fine, except the project's founder, Michael Igarov, had a bunch of loans against the CRV as collateral. So he locked up the CRV tokens in Aave in different lending markets, borrowed stablecoins, and what he actually did was buy a mansion in real life with those stablecoins. So whenever the CRV price tanked, he was liquidated. And what this means is that his outstanding stablecoin debt that he took out could not be fully repaid by his collateral. So the protocol Aave tried to automatically sell his collateral on the market to cover that loan, but there was not enough liquidity to cover it. So that left Aave and these other markets with bad debt. And he was in the process of repaying that debt just as a good deed. But this was very bad, and this is just kind of an illustration of how crypto lending and borrowing works. And any initial thoughts on this before I kind of dive into my thoughts?
Well, the first thought is I think it's really cool that he transitioned from the crypto world to the real world. Um,
Hmm.
I wonder, yeah, well, I guess he wasn't paying back his USDC quickly enough. That's why he's still an outstanding balance and it was secured by Curve. Also coming full circle, I mean, does that mean Aave's liquidators weren't fast enough to get out of the positions, or there wasn't enough liquidity to source $140 million dollars worth of buyers?
Exactly. There
Gotcha.
was not enough liquidity on decentralized exchanges. So for beginners, this is the concept that there's not enough takers in the market who will exchange the token that he took out in a loan. So it was USDC and other stablecoins, I believe, who would exchange those for his CRV token. So whenever they tried to sell his collateral, the CRV tokens on the market, they couldn't find enough stablecoins to cover his debts. And that was the problem. And I'm actually not sure if it was Aave. I know Curve itself has a lending market, so that was one of the protocols that was left with bad debt, but there was a few that he was using. And I don't know if I mentioned this, but in total, it was $100 million worth of stablecoins. So not a
Wow.
trivial by any means.
No.
Um, Yeah, so that happened, and what ended up happening is that I know for a fact that he left Curve's lending market with bad debt, which is his project. So what he had to do was take his remaining Curve tokens. He couldn't get any liquidity on decentralized exchanges. He went to an over-the-counter buyer, and they made a deal behind closed doors to give him stablecoins for those tokens, likely at a discount. So he was able to pay back his bad debts on Curve's lending market, and I think he's all square on other lending markets now. Perhaps those were liquidated correctly, but this just goes to show kind of how DeFi works, and I think it's very instructive of how these things work. And also, there's a lot of speculation that he wanted to get liquidated because he's the founder of this project. If he sells all of his tokens to go buy a mansion, that's a bad look. So what he did was take out a loan against his tokens, buy the mansion, got liquidated, said, oops, I didn't mean to get liquidated. That sucks. But he, in effect, dumped on all of his token holders. So just speculation.
Yeah. It strikes me too that, yeah, 140 million or 100 million is a lot of money in the crypto space. It's a drop in the bucket in traditional finance, and this wouldn't have made the news. So, yeah, it's important. It's a big deal. It's a risk everyone needs to see, but it just shows how much growth that crypto can still have to even get to 5% of the traditional finance market and traditional finance ways like taking a loan to buy a house, things like that.
100%. And I think the thing to point out here too is that this liquidation mechanism where lending protocols, whenever you take out a collateralized loan, so you collateral, you put it in there, you take out stablecoin debt. If your collateral goes too low against the value of your debt, they will automatically sell your collateral on the market to cover it. That whole concept works very well in DeFi. We've had this mechanism for years, and even with the FTX collapse and Three Arrows Capital, all those protocols were able to liquidate debt correctly and stay solvent. And generally, these things work. The reason this didn't is because that is a very significant percentage of the overall Curve supply, and it's a relatively illiquid token. If this was ETH that was being used as collateral on the Ethereum mainnet, it's extremely liquid. You could sell it immediately. So I think that just, I want to highlight that because these mechanisms work and they're really interesting financial tools. And once we have institutions in here to provide more liquidity for all of these instruments, it is much more efficient than alternative liquidation and collateralized lending agreements in traditional finance.
Yeah, absolutely. And Ben, I think I'm going to make a note for you. Just hearing you talk, it seems like there should be a whole round of new lending markets that come up that don't value each asset equally in terms of its value. If a USDC is valued at $1 no matter what, well, maybe ETH is valued at $0.98, but maybe this Curve token is only valued at zero point 0.5, so that those kind of risk parameters can be adjusted in real time. Um, because clearly Curve knew the token wasn't as liquid as ETH, but they agreed to this. It seemed like there should have been some lower, not utilization, but loan ratio for that kind of thing. And maybe there was. It just strikes me as that's an opportunity for improvement.
No, 100%. There's firms such as Gauntlet, Chaos Labs that help tune these parameters. So typically, it's the onus of the lending markets. If the lending markets don't tune these risk parameters correctly, they can be left with bad debt, which is not what they want because that takes away from their treasuries and their token holders. So it's on them to tune those parameters, have the correct models, and different lending markets have different models for how to do that. And I'm not sure about Curve, their lending market specifically, but it sounds like you're right. They did not have those parameters tuned correctly. They should have known that there was not enough liquidity in the case of his position getting liquidated. But
Mhm.
again, he's the founder. He had all of his protocols tokens, used his own lending market. So there's some shady stuff going on. I don't know the specifics, but that could be a contributing factor for sure.
Yeah, agreed.
Yeah. Okay. Well, cool. Next to move on, tweet of the week here. I want to throw out a tweet of the week because I really like this one. So Nick Tomeno here, good follow on Twitter. Works at One Confirmation, a prominent venture capital firm. He said the past 15 years of crypto were about deep tech and finance. The next 15 are about culture. We need more people thinking deeply about the intersection of crypto and culture and less people thinking deeply about MEV and yield farming. I really like this take because whenever I talk to normal people, my friends, my family, whoever it is, about all these obscure concepts, if you're a ginormous nerd, it's interesting like us, right? If you're a finance nerd or a tech nerd, it's great. But the only way to get any adoption of the tech into normal people's hands is to have this cultural aspect. And this kind of leads into a discussion we had previously about celebrity meme coin tokens, which people are saying this is the way to get people into crypto culture and bring mainstream culture to crypto. I completely disagree with that. I think we really need to think harder about how we should do this the right way and actually bring utility to people. So, any thoughts on this tweet? I'm interested to hear what you think.
Yeah, well, when I first read this, I thought he was talking about the amorphous community, like Zero or ZKsync is about the community, which I sort of think is bullshit just to get money. But if culture is a code word for getting it into the culture of today's society, love it. Again, this would be then the third instance that we've heard in the past 3 days, or yeah, 3 days of how retail is becoming important, and we need to think about retail, and we're at the genesis point, maybe the inflection point of retail, since there's a little bit of mind share happening about it.
Yeah, 100%. I believe this is what he means, and I completely agree with that take. I think that the current way that we've gotten retail into crypto last cycle and maybe a bit this cycle is just meme coins and complete speculation. People love to gamble, and that's great. But if that's all we can offer them, then I would say crypto fails as a technology on that front. I believe as infrastructure for the financial system, we're well on our way. We have all the signs that it's being adopted, it's being integrated in the financial system. On that front, we're doing great. Honestly, better than I would have believed and anyone else would have. I think everyone going into the cycle thought we're going to get another retail cycle. We're going to have all of these retail apps, and people are going to onboard because we have cheaper transaction fees with L2s. We have these new social fi applications like FriendTech, etc. And this is what's going to bring everyone back. But that's not what has happened at all this cycle. We actually got the institutional interest before the retail coming back. So that's one thing to point out. And then I just think we need to figure out, and this kind of goes back to your game comment, how to augment existing products that we know work well with crypto technology to make them better or enhance people's experience, make them money, things like this. And one instance of this is actually Ton, the open network associated with Telegram. So they already had an encrypted messaging application of billions of users, a normal Web 2 product. And then they came out with this crypto enabler network to go with the product. And that's been extremely successful. And I think that is just a hint at what is going to work in the retail realm.
Yeah, so I can't speak to that, but for me, the thing I'd want to see is Coinbase to buy a mid-tier bank, and I can log into one thing and transfer money back and forth and handle everything in one app. That's that's what I want. That's probably completely illegal right now, but I don't want to have to clearinghouse or wire transfer to Coinbase, bring it out, blah 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 blah. I want a unified financial app, and I guess I put crypto closer to banking than I do to like Fidelity's and Vanguard side of things because I have access there through ETFs. Well, not through Vanguard, but I have ETFs. I just want an easy way to move my money around. And at least for things like Bitcoin and ETH, they're so liquid, it should be possible to move things like that. So that would be a step I'd like to see as maybe a little bit older investor.
Yeah, I think you're looking at it though again, like he said, the past 15 years were about that would 100% be finance. That's the finance realm. We already have worked on
Gotcha.
that, and I think we're well on our way. And I think you'll get that. I think there's two perspectives through which to view crypto. One is as the new infrastructure for the financial system, and I think that's playing out faster than
Yes,
anything else.
fast.
And you are going to get that, and you're going to get that product. But two is the whole. It's kind of a meme at this point, but the Web3 thing, and that got really hyped last cycle. But I think there's a kernel of truth in the statement in the term Web3. And Chris Dixon from A16Z, his book Read, Write, Own, frames this perspective of crypto technology as an enabler of Web2 technology in fixing a lot of the centralization, censorship vectors that occurred in Web 2 and also adding this financialization aspect that, if we do it correctly, can be a huge value add. And I think those are two distinct ways to look at the technology. And it's just really interesting that it can simultaneously be both. It can be the back end of this new financial system for institutions all over the world, and also something that enables new forms of monetization for creators, new types of distribution models for artists, other things like this.
Yeah, that makes sense. I mean, that's not really what I'm in tune with, but that makes 100% sense for probably the majority of the retail audience.
100%. The finance stuff is dry. People don't like that. And that's what I'm saying. Like,
Yeah.
you should read Chris's book. He's very good at describing this because he's a Web2 investor. He was an early tech investor in Silicon Valley, and he understands that. And I think that we could get both. And I'm just really excited to see how this continues to play out. And the more people that are thinking about how to get crypto technology useful for normal people and then getting it into popular culture, the better. So that's an
Yeah.
area I'm really interested in. So we'll see.
Well, I think you bought his book on my Amazon
Cool.
account, so when you're done with it, you can give it back to me.
That's fine. I will. All
I'm
right.
kidding.
Pay you back, sir. I'll send you a transaction right now on an L2. We're not using Venmo anymore. We'll just send you some ETH.
All right, fair enough. Fair enough. I want it paid in low value altcoins that are going to moon.
Yeah, it
All
doesn't
right,
look
what do
like
we
any of them
got?
are moving. So, all right, those are the big topics that we had, but there's plenty of a lot of things happened this week. So the one, let's just hit on these really quick. The
Yep.
Biden campaign, they flip-flopped again. At the end of this week, they were announced that they were in talks with different crypto companies, people in the industry, to accept donations in crypto. And this is after Biden vetoed SAB 121. Everyone thought that they were anti crypto again after showing some promise with the ETH ETF potentially influencing the SEC's decision. So it's very confusing. And after being very hostile over the last 3 years, my take is that they're just saying Trump gained money and support from pandering to the crypto people. So they're like, we want money and support. Crypto, yeah. But then on the back end, their actions are contradictory. So I don't think people like it very much because it seems disingenuous. Not that Trump isn't like genuine at all. I don't think he is. I think he just played it better. But that's the state of where things are. Any thoughts?
Yeah, it's American politics. That's about he wants money. It's about American politics. Is what it is. Whatever. Hey, if it helps crypto, I'm all for it.
Yeah. Yeah, true. It helps us, I guess. It is actually interesting too. There was an article in the Wall Street Journal or the Financial Times, one of the two, saying essentially that crypto could be a way to export the dollar and get people to buy our debt, which sovereign central banks and countries don't want to buy at the moment, or at least the demand for our treasuries is waning. And this was the first piece that I saw in mainstream financial news floating that idea. So, just generally speaking, the tide very well could be turning on crypto, and it seems like that's the case, which is, again, something really surprising.
Yeah, so I'm glad you brought that up because I've had this written down for a while. USDC and
Hmm.
USDT are currently the like stable coins, the 14th largest holder of US Treasuries. Um, and they'll probably move to third relatively quickly behind China and Japan, I believe, are the top two. Um, so it's
Hmm.
this weird thing that it's very possible that the world could own the US debt because these companies have to buy so much because there's so much demand for USDC and crypto. Um, I guess that's good for the US debt if there's a demand for their currency, interest rates go down, all that kind of stuff. Now, there's a lot of economics and a lot of geopolitical crap that has to happen, but it's just interesting to see these stable coins are now meaningful holders of US debt.
Yeah, 100%. And just to give people a quick note there on why they don't understand why that's the case, basically the business model of these stablecoin companies like Circle is they take your dollars and give you a stablecoin, a token on a blockchain representing that dollar. and then they keep the dollar on their balance sheet, but then they invest it into US Treasuries and get like the 5% yield that Treasuries are yielding, and that's how they make money. They don't pay you anything. They just give you this free token to mint on a blockchain and then get yield from Treasuries. And actually Tether is they make billions of dollars with 50 employees or something from this business model. So these are some of the best companies in crypto. And actually, Circle is planning to go public in the United States sometime soon, I believe. So very interesting thing to keep your eye on, and just wanted to explain how that business model works.
Yep. Good.
Cool.
Hey
Another
Ben, I made a
thing,
note here. I made a note here that
yeah,
Eigenlayer Season 1 Phase 2 airdrop for LRT holders was announced that will go live within the next week. I guess you and I need to make another trip to Italy to claim that. So that'll be fun. But I'm curious to see how well this works because there are literally hundreds, it seems like, of various LRT options and places where LRTs are staked. And the snapshot was in March, so hopefully the 3 months they've been able to figure out where all these LRTs were at that point. Because it's only going to get worse. It's proliferated since then.
yeah, no, 100%. I think they've dug themselves a bit of a hole too. People aren't really happy with that airdrop. People are never happy with airdrops, is the thing now. They're free money. People don't think they get enough. It is difficult for Eigenlayer, but I think Eigenlayer was a huge narrative earlier in the cycle, like restaking, restaking, restaking. I feel like everyone forgot about it. So that's a good thing to keep your eye on,
Yeah.
definitely. And just pay attention. This is a bit of an advanced topic, so if you're a beginner, just read about Eigenlayer and restaking and why that's a thing. But a lot of their actively validated services are going live soon, and this can enable all kinds of new applications, L2s at much cheaper costs. So it'll be interesting to see what happens there.
Yeah, the point of these tokens is part of the revenue they generate from these actively restaked protocols should flow back, hopefully, to token holders.
Yeah,
Is that not how it's
yeah,
supposed to work?
I believe it is. Honestly, I'm not
Yeah.
really in depth knowledge about Eigenlayer's tokenomics, but I can look into it. I believe that is the case, though.
Yeah. Okay. Hey, talk about this fine.
Yeah, this is what I'm pulling, or I pulled up the wrong thing. Wait, I'll mention this real quick. We don't have to talk about this,
Yeah.
but JP Morgan tokenized a money market fund of Fidelity. I don't know which blockchain this is, but just speaks to the increased institutional adoption. We hit it over and over again. Just listen to us. This is in full force. The institutions have capitulated. They love crypto. It's happening. That's my only comment.
Yep.
Yeah. So here we go. Here's an interesting thing. Terraform Labs and Kwon ordered to pay $4.5 billion to settle SEC fraud case. So back in last cycle, Terra Luna was a project that famously exploded because the entire thing was effectively a Ponzi scheme. And interestingly enough, they had a bunch of ginormous investors. I know Mike Novogratz, the billionaire CEO founder of Galaxy. Am I saying that wrong? No, it is Galaxy. Galaxy Crypto. Yeah, Galaxy. He got a Terra Luna tattoo on his arm at the peak of this whole Ponzi scheme going on, and then the whole thing exploded and the price went to zero from a very high rate. So the SEC finally fined Terraform Labs and its former CEO around $4.5 billion as part of the settlement. And this was just kind of the big news of the week. I believe Do Kwon is in jail or going to jail. He was a Stanford guy, a very outspoken entrepreneur. He would get his community to silence the haters by saying they were just fudding, they were fudding, they were fudding. And then the whole thing collapsed, and finally we're kind of getting the conclusion to this whole story. Any thoughts on your end?
I have no thoughts on that, but when you said a Stanford guy, that reminded me we've still not heard from Fred Krueger about Fight Night. I don't believe. Have you heard from Satoshi?
No, no, I've not heard from Satoshi, but I think Fred, we gotta start tagging him because
I
he either
do.
saw it. Did you tag him?
I tag him. He just ignores me.
Yeah, Yeah, I don't know. Okay, wait. Here's the chart. Also, I really like pulling up this chart because it's really
That's
funny.
a good looking chart, bud.
Yeah, you can kind of guess where it collapsed.
The straight down part.
Yeah, the straight down part. So that's over. They got fined. Hopefully, that 4.5 billion is going to people who lost money on this and not straight to the SEC's pockets because that's kind of egregious. Regardless, that's how it's shaping up. And in terms of Fred Krueger, Fred, again, we're asking you again, please fight the Grand Tonto. It would be great. We'll donate the money to charity. Anyone you choose, winner gets 80% of it, loser gets 20% of it for their charity. Boom.
Hey Ben, consensus 2025 is when it'll happen.
All right.
The main
All
event,
right.
right? Main event.
Yeah.
That way we have
I
plenty
like
of time to train.
I like it. I like it.
All right.
All right. Just a couple more topics here now, guys. We're running up on an hour. Like to keep it to that. So Optimism, the layer two, the op stack, the super chain, finally got fault proofs, permissionless fault proofs to be sure. So basically what this means is that whenever the protocol needs to submit its current state down to the Ethereum L1 to say everything that's happening on here is legitimate, there was currently permissioned actors doing that process. So there was a permission proposer and a permission guardian. So the proposer would submit those states down to the L1 and the guardian would watch them, make sure they're not doing anything. And that was permissioned process at first. That process is now permissionless, and that moves Optimism in the whole op stack to being a level 1 decentralized chain. So that was really big news because this took them a while to have permissionless fault proofs. L2s are decentralizing. They're becoming more secure over time. So that's just a kind of cool, more technical news story that happened this week.
Oh, that's cool. That's great. I like seeing that technical progress.
Yeah. So nothing else there. Just wanted to shout out Optimism. Shout out Superchain. We love the Superchain. And last topic here, real quick. I'll see what you think about this.
Is this the face tattoo?
Yeah. So I think this is real. I'm pretty sure it's real. Our younger viewers will know who Lil Pump is, the Gucci Gang guy. He got a tattoo on his face of Solana. So if you want to call that being integrated into the culture, you can. I won't go that far. I think it's interesting, but this happened.
I think it's spray paint.
It might be. I don't really know. But he does have other face tattoos, though, so.
Yeah, but Ben, it's okay. I have no comment.
So if you look at his other face tattoos, it's like a rock. I don't know if it's real. I'm with you, but like, I don't think he's the type of dude who like wouldn't do it.
No, it just looks like spray paint to me. That's all I'm saying. I mean, I'm sure Lil Pump's a great dude and he likes Solana, I guess, but I don't know if he I mean, it seems like there's some religious motif to like this Fabio person in the cross. I don't know if Solana would also be good for that motif.
Yeah, fair point. I don't know. Yeah, perhaps this is photoshopped or spray paint, whatever. Who knows? This was circulating on Twitter though, and another
Is he a
interesting
crypto
point.
guy or a rapper? What is
He
he?
was a rap. He was a rapper.
But his nickname was Lil Pump, like pump and dump.
Yeah.
Okay.
Yeah, here he is. Here's all his music videos.
Skid It. That's one of his videos. It's called Skid It.
Yeah, what do you think about this right here? Wait.
I uh yeah, I think this has gone off the rails. We've reached an hour. This is probably means we're out of content for this week.
Yeah, I think we actually had some good discussion. Lots to talk about, but that should wrap it up, I think.
Absolutely. Stay tuned for our interview with Justin Bibas of Ironclad, Conclave, and Codex coming soon. That'll be out just after this podcast.
Yep, that was a real good one. Keep you guys updated. We're going to share these shorts to kind of give you a sneak preview of the interview. It was a great time. In the meantime, thanks for joining. Like the video, share it with a friend, comment.
Shout out to my Sycamores.
Yeah, shout out. Sycamores.
And real
Shout out.
True Brand, baby.
Shout out True Brand. Love you guys. Please subscribe. Help us grow. Well, maybe we should drop NFTs or something at some point. I think we need to get into that. We got to give people
There's the
something.
Tonto coin. The Tonto coin, bud.
I don't want to be subject of an SEC investigation, but Tonto coin?
Tonto coin. Yeah, it's a giveaway.
Fair enough.
Who's going to buy it? Nobody.
Okay.
All right. Let's do it.
I don't know.
Talk to you
Maybe
later,
our fans-
crowd.
maybe our-
Hey, what's the name for our followers? What do we call them? Are they the Empire? The Internet
I
Capital
got
Empire?
I don't know.
All right,
I don't
that's
like
for next
Empire.
week. Okay.
I'll think about it. That's for next week. We'll let you guys know. Thanks for joining.
All right. Thanks,
See you
guys.
later.
Bye.
So, bye.
See you, buddy. Bye.